contract which are formed under the common law. So basically, the contract which are formed under the common law, they require some offer. There should be some offer which is proposed by one party to the another, and other party should know about that offer. They should have some intent, and that offer should not be made in any in terms of any joke. Okay, any statement which is made in terms of joke, it is not considered an offer. So it should have some meaning. Both the parties should have intent regarding the offer. Next, there should be some acceptance. Okay, acceptance means the in order to be a contract to be formed, the offer should be accepted by another party, and acceptance should be made before the expiration of the offer, or should be made before the revocation of the offer. Okay, so we discussed about uh, various conditions under the acceptance. So when the offer is considered to be accepted, when the offer considered to be a counter offer, because if you are accepting the offer not on the basis of original term, but instead you are accepting that offer and making some changes, then that offer will become a counter offer. Okay, also if your acceptance is by some other means that is mentioned, like the offer state that you have to accept it by mail, but you are accepting by other means of communication, then in that case the offer also becomes the counter offer. Next, we discussed about consideration. So there should be some value which is exchanged between the parties. So what kind of consideration is considered to be valid and what is not? We discussed yesterday. Legal capacity means in order to form a contract, there should be some legal capacity, means party is able to perform that obligation. In case if any of the party sorry, in case if any of the party is minor, below the age of 18, or is mentally incapacitated, means is not able to understand what is exactly the contract is, or is intoxicated, means have some is not in real state of mind or in conscious state when they are accepting the offer, so in that case the offer will become voidable by any of the parties. So there should be some legal capacity in order to have the offer valid. Legal purpose means the offer should be of some legal purpose. The subject matter should not be illegal, like something illegal like drugs and all. Mutual assent means both the parties should agree to the same thing, and the offer should be in proper form, because certain offer require the agreement to be in written form. So a contract, to be a valid contract, it should be in proper writing if it comes under statutes of fraud. So what are statutes of fraud? So these are basically the limitations which require certain contract to be in written form. Like if there is contract something related to marriage, like if a person marries someone and he will get that offer, in that case the offer or a contract should be in written form. If the contract is for more than 1 year, then in that case it should be in written form. If it is related to real estate sale, if executive promises, like if you're promising something, then in that case offer should be in written form. Goods over $500, if the contract involves certain goods which are above the $500, then in that case it should be in written form. Suretyship means if someone is guaranteeing some debt of another people, so in that case it should be in written form. Okay, also we discussed about various scenarios in which this offer can become void or voidable, and certain defenses which can make the offer void or voidable, means that a party can use to escape from the contract. Is it clear? So any doubt in this contract which are formed under common law?
No, ma'am.
Okay, so today we discuss the contract which are formed as a result of UCC Article 2nd. So basically, what is the difference between both these two laws? If we talk about these laws, then common law is used basically cover the contract which are formed for the land, employment, or any intangible assets. Okay, whereas if we talk about UCC Article 2nd, so it covers the good which are tangible. Okay, so meaning of good under UCC means the goods which are tangible, means personal like machinery, equipment, cars, electronics, inventory, furniture, crops. It should not include real estate, services, and intangibles. Okay. So one more thing you will find in this topic is merchant. So merchant is basically the person who deals in goods of kind or holds specialized knowledge. Okay, so merchant are held to higher standard. So these are the people who basically deals in the goods on a regular basis or claims a special expertise in them. Okay, so if we talk about the formation of contract under UCC, a contract is valid even with missing terms. So again, if we talk about all the difference between common law versus UCC. So first of all, to be for a contract to be formed, there should be some offer. So in the case of okay, just so if we talk about the offer, for under common law, so under common law, your offer requires the terms should be in definite form. Okay, the term should be in definite form means everything should be mentioned in the offer. Their type, their nature, their quantity, their qual, anything related to the your subject matter. But in case of UCC, your offer should not require everything to be in definite form. Means if your type and quantity is mentioned in the offer, then it will become a valid enough. Okay, so mainly your type and quantity is required in the offer. Second thing, as I told you, there will be some intent to intent that the parties are willing to come under that contract. So that is also same under UCC. Next, the offer should be communicated to each party. That is also same. But in case of if we consider the case of firm offer rule. So basically, what happened? The contract formed under common law required that there should be some consideration in order there should be some consideration that is paid to keep the offer open. Okay, but if we talk about the contract which are formed under UCC, especially in case of merchant, like if merchant is involved in the contract, then in that case the offer will become irrevocable up to 3 months even without the consideration. So they have 3 months period time where the offer is still open, still irrevocable. Okay, even there is no consideration is involved, but this is valid only in the case of merchant, or there is some promise which is promise is enforceable for the time in writing for a month of 3 months. Okay, is it clear? First thing about offer.
Yes, ma'am.
Okay, second, if for a offer like it is communicated to the offeree, now for a contract to be formed, acceptance is required. So what happened under the common law? Your acceptance require the mirror image rule. Means if you are accepting the offer, you have to follow all the terms which are exactly in the offer. You do not have to change the terms, because if you are changing any terms, then that offer will become a counter offer. But in case of UCC article second, you can accept the offer even by changing certain conditions. Okay, so some minor changes are here allowed. So if you are doing any minor changes to the offer, it will not change your offer, means it will not consider as counter offer, it will still remain the original offer. Okay, so second difference is this, that you can change the conditions of the offer slightly. Okay, so minor changes are okay under UCC article. Also, there is no distinction between unilateral and bilateral offers under UCC. Okay, so if we talk about other things under acceptance, that is also the same, that you have to accept the offer within your time period, because after expiration the offer will not become valid. Second thing, your acceptance should be early, like early acceptance will be considered, like whoever is accept the offer early, that will be considered as the valid party. Okay, any doubt?
No, ma'am.
Okay, modification or consideration. So to be a valid contract, there should be some consideration involved. So basically consideration should be of monetary amount or of value. Okay, as we discussed yesterday. So similarly under UCC, you also need consideration, but if you are doing any modification to the contract, it require additional consideration in case of common law. For example, if you ask someone to paint a certain house for this amount, so that was your original offer. But if you are asking them for certain modification, like to paint something else along with that house, then in order to make the modification, it requires some consideration. But if we talk about the UCC, then you can make certain modification without any additional consideration. Okay, so if you are making the modification in the good faith, then there is no requirement of the consideration. Okay, is it clear?
Yes, ma'am.
Okay, so next is obligation of the parties. Obligation of the parties means basically you are here considering some seller or a buyer. So seller perfect tender, like right to cure, and buyer can have the obligation to inspect, accept, and pay for the goods. Okay, so if we talk about their obligations, so seller has the obligation to provide the goods, but buyer has the obligation to accept that good, to inspect, and to pay for that good. Okay, next is risk of loss overview. Varies depend upon shipping terms and whether seller is a merchant. So basically, if the goods lost or damaged in between, so to whom the risk will be transferred? So it will depend upon the shipping terms, or it will depend whether the seller is a merchant or a non-merchant. So we will discuss later in these slides. Example scenario. So Tox Machine India buys 100 hydraulic cylinder from a merchant in US. Offers is a firm for 45 days. Supplier add a payment term. So valid acceptance. Price missing caught fill a reasonable price. So slide detect supplier may cure if the time remains. Okay, so here is the detailed explanation. So first we talk about offer. So offer is basically the proposal composed by one party to the another party. They should have some intent and must be communicated to the offering. Only difference is that here you need not to mention everything in your offer. You only quantity and type is mandatory, like to mention. Next, acceptance. So unqualified agreement to the terms of the offer. Here you can accept the offer even by making certain changes, like some minor changes are okay if we make the contract under UCC. Consideration. So considerations should be of something legal value. Okay, it may be your monetary amount, it may be something of the means value. This should be considered a valid consideration. Any goods, services, any property you are transferring, any promises to it or reference. Okay, so only difference here was that you can make certain modification to the contract even without additional consideration. Next, legal capacity here. If you are forming the contract under UCC, all legal capacity is also required here. Means party should be mentally and have legal ability to form the contract. Okay, so if someone is making the contract with minor or an intoxicated person or a person who is like mentally incompetent to understand that offer, so that means they have limited capacity to perform the contract. So in that case the contract can become voidable. Okay, so anytime the party can escape from the contract and make it a voidable. Lawful purpose, like if you are forming any contract, it should have some valid purpose. So if the contract involves something of illegal subject matter, then it will not consider a valid contract, it will become a void. Void means any of the party will not able to execute the contract because it is illegal, it is void under the law. Genuine consent means agreement must be free of fraud, undue influence, mistake, or duress. Ki your consent to do that contract should be genuine. Like if you are making certain agreement by involving some fraud in the execution or fraud in the inducement, like you are coming under the agreement by even by don't informing the other party, you are just uh, making their signatures by some illegal means, so it will be considered as the fraud. Undue influence, like if you are making the contract by threatening the other party, okay, by physically damaging the other party, so it is considered, it will make the contract void or voidable. Okay, any doubt till here?
No, ma'am.
No, ma'am.
Okay, so next we talk about, okay, so next is your topic is delivery, risk of loss, and title. Okay, so delivery means when you are transferring your goods to the buyer as per the terms of the contract. So it may be actual, constructive, or symbolic. Under UCC, delivery obligation depend upon the contract is shipment contract or a destination contract. Shipment or destination. So shipment means when the title of the goods are transferred to the buyer as soon as your goods are put into the carrier. So when you put your goods to the shipping, then title will be transferred to the buyer. But if we talk about destination contract, the title from seller to buyer only transfer when goods are reached to the destination. Okay. Next is risk of loss. So risk of loss means when do this risk of loss will be transferred to whom? So risk of loss means who will bear the financial responsibility of the goods if the goods are damaged or lost in between the contract. Okay. So it will clearly depend upon certain factors. First is non-carrier cases. Non-carrier cases means when there is no shipment involved. You just have a store, someone comes to your store and buys the product, buys the good. So in what case your goods will your loss will be transferred to seller or your loss will be transferred to buyer? So if you are a merchant seller, means you are a someone who has expertise and you're selling that good and you are expertise in that selling, then in that case the risk passes on buyer's physical receipt. So when the buyer actually receive those goods, only then the risk will be transferred to the buyer. But if you are a non-merchant seller, then in that case your risk passes upon tender of delivery. Okay. So your risk transfer as soon as the buyer buys the product, no matter whether he received physically or not. Next is carrier cases. Carrier cases means when there is shipment involved. Okay. For example, you are sending the goods from one location to the another location through shipment. So in that case, your shipment contract, your shipping terms will decide the transfer of title of the goods. So if there is a shipment contract which stated the title is transferred to the buyer as soon as the goods are put into the shipment. So that means risk of loss will be transferred to the buyer when the goods are delivered to the carrier or when goods are put it into the shipment. Destination contract means the risk is transferred from seller to the buyer only when the goods reach the destination of the buyer. Is it clear? So, to whom the risk of loss will be transferred? It will depend first on non-carrier or carrier cases. Next, if non-carrier cases means depend upon merchant or non-merchant. If it is a carrier cases, it will depend upon shipment or destination. Okay. Next is good held by bail. So in this case, the risk passes when buyer receives documents of title or acknowledgement. Okay. Next is breach. So if seller breaches, the risk remain with seller until cure. So if seller has breached the contract, in that case, the risk of goods will remain to the seller. Okay. Any doubt till here?
No, ma'am.
Okay. Risk of loss example is given. A is selling shipping goods to B under FOB shipping point. FOB shipping point means the title will be transferred to the buyer as soon as the goods are put into the shipment. So here goods are damaged in transit. So if since it is a shipping contract, so that means goods will be title will be transferred to the buyer when the goods placed into the shipment. Passage of title already discussed. So passage of title, the right to risk of loss and title both are different things. Okay, risk of loss means who will bear the risk, financial risk if the goods damage. Title means ownership of goods. So under UCC, unless otherwise agreed, the title passes when seller completes the physical delivery. In shipment, the title passes when good delivered to carrier. In destination, title passes when goods receive tender at the destination. If goods are identified to the contract, title cannot pass until identification occurs. Okay, is it clear? Okay, next is warranties. So warranties means is a contractual promise or a guarantee made by a seller regarding the quality, condition, description or performance of the goods sold. Okay, so basically some of the uh, claims that are made by the seller regarding quality, condition, description or performance of the goods sold, it comes under the warranty. So different types of warranties are there. First is express warranty. Express warranty means which arise basically from any affirmation of fact, description, sample or model that becomes part of the basis of the bargain. So which are basically specifically stated by your seller by affirmation of the fact, description, model or sample. Okay. For example, the seller state that this machine consumed 20% less power. So it is called the express warranties. So express warranties means that is the basically basis of the bargain. So it cannot be disclaimed. That means ki a disclaimer is basically not available for this kind of warranties. That means seller cannot deny these facts. Okay. So, for example, your seller is saying that this machine consumed 20% less power. It is now called the express warranties. Next is implied warranty of merchantability. So, implied warranty means it applies when the seller is a merchant dealing in goods of a kind. Okay, so that means implied in warranty means when your good is fit for some ordinary purposes, is it adequately packed and labeled of fair and average quality. So basically, this type of warranty arise only when the goods are sold by merchant or they can disclaim by giving general disclaimer or a specific disclaimer. So the seller basically claims that the goods are fit for their normal uses and they perform in accordance with the claims or description on their packaging. This warranty is only implied when goods are sold by the merchant. Okay, and these types of warranties are basically disclaimed by giving certain disclaimers like some general or specific disclaimer. For example, if you are buying a refrigerator from home appliance store, implies that it should be cool properly. So these types of warranties are called implied warranty. Implied warranty of fitness for a particular purpose. So implied warranty of fitness for a particular purpose, it basically applies when buyer relies on seller's expertise. Like someone comes to purchase something, and as a seller, are we are recommending them that product, or they are basically relying on our expertise. So they are purchasing something on our expertise when we are basically suggesting some product to them. The seller knows that buyers particular purpose and buyers are relying on the recommendation of the seller. So these are called the implied warranty of a fitness for a particular product. The seller basically promises that the good will meet the specific needs of the buyer. Okay. So when someone is purchasing something on the expertise, on the judgment or skills of the seller, then this is known as your implied warranty of fitness. So basically, in this case, your seller is totally liable, and this warranty can be disclaimed by giving general disclaimer or a specific disclaimer, but it should be in written form. So buyer asks for paint suitable for outdoor metal, and uh, like buyer comes to you and specify their need, and on the basis of your expertise, you are giving them certain product. Next is implied warranty of title. Implied warranty of title means when seller warrant that the title conveyed is good, transfer is rightful, goods are free from undisclosed liens. So title is basically good, transfer is rightful, and no liens, no encumbrances are involved. So these are basically these types of warranties are basically disclaimed by specific or explicit language of the seller. So seller here basically claims that to have the good title transfer to the product with no undisclosed liens or claims. So it basically automatically present in all sale of good unless specifically disclaimed by the seller in a manner that make it clear that seller is not promising to clear title. Okay, so unless the seller specifically disclaimed this warranty, otherwise it will always implied through the goods. Selling a car without revealing there is a bank loan on it violate the warranty of title. Next is disclaimer of warranty. So we already discussed disclaimer means when the warranties can be disclaimed. So if there is a express warranties, so express warranties generally cannot be disclaimed. Okay, so it cannot be denied by the seller because these are basically specifically stated on the goods. Merchantability warranty, this can be disclaimed using the word merchantability and must be conspicuous. So these are basically disclaimed by giving general description or special disclaimer. Fitness warranty, they should be disclaimed only when it is in writing or conspicuous manner. Next is breach of warranty. So if someone breaches the warranty, then in that case, breach occur when goods fail to meet the express or implied warranty standard. So buyers remedies may include repair or replacement. So if someone has breaches the warranty, so in this case, as a buyer, you have certain remedies like repair or replacement. You can do repair or replace your product, refund or price reduction, or consequential damages if foreseeable. So for example, a laptop promised to have 16 GB RAM arrive only with 8 GB. So in that case, if the your product is failed to meet the requirement, meet the warranty, then in that case, you as a buyer, you can claim its repair, replacement, refund, or price reduction or consequential damages. Next is UCC remedies. So what are the remedies are available for a buyer or a seller when they are making the contract under UCC? So seller's remedy, they can cancel the contract, withhold delivery, resell goods, recover damages or recover prices. So as a seller, you can cancel the contract, you can withhold the delivery, like if the other party is not giving you the consideration, then you have the right to withhold the delivery, resell the goods. Okay, so if someone has returned you the goods, you have the right that you can resell the goods, you can recover damages, you can recover the prices. Buyer's remedies, they can cancel the contract, cover, like they can buy substitute goods, sue for damages. So if they are facing any damages because of you, then in that case they have the right to sue for those damages. Seek specific performance, so if they require some special performance from your side, that they can also do that also. Incidental and consequential damages, so cost to deal with the breach. Consequential damages means foreseeable losses due to breach. So if when someone has breached the contract, then what can be the possible losses associated with those contract? So those losses may be recovered. Any doubt?
No, ma'am.
Next, entrusting refers to delivery goods to a merchant who deals in goods of that kind. When goods are entrusted to such a merchant, the merchant has the power to transfer all right to entruster to buyer in the ordinary course of business, even if the merchant violates the instruction. Okay, so entrusting basically means कि when you are transferring goods to the merchant who has the expertise in dealing the goods of that kind. So entrusting include delivery, acquiescence, repair or possession of for sale. Merchant must be one who routinely deals in the goods, buys in ordinary course, take free entrusters right, protect innocent buyer and promote commercial reliability. Okay. Okay, so next topic is agency. Agency is basically the legal is a relationship where the principal authorize an agent to act on their behalf. So now what happening? One party is giving or selling their product to the another party. So what happened when in case one party appoints someone else to act on their behalf? So this is called the agent, and this kind of relationship is called the agency relationship. The agent agrees to act under the control of the principal. So principal here who basically appoint that person, authorize that person to act on their behalf. How agency is created? So it can be created by explicitly stating, like you are explicitly stating someone that uh, you have to perform on my behalf by doing some written or oral agreement with that person. So this is called the express agency. Next, implied agency. Implied means it created from conduct or circumstances. So basically, when the agency is formed as a result of some conduct or circumstances, then it is called the implied agency. Apparent agency means it is created when principal's action make a third party believe that someone is an agent. So this is called the apparent agency. So when principal create a impression that agent has the authority. Okay. Ratification means principal accept or approved an unauthorized act after the fact. So ratification means when the agent like act without any actual or apparent authority. But since you are a principal and on the basis of your agent section, you have to accept their your responsibility and have to accept that the unauthorized act. Okay, yeah, principal when decide after the contract is made to still honor that contract, it is called the ratification. Operations of law means created automatically in emergencies or family necessity situations. Okay. So next, to form an agency, there may be certain requirements. First is principal must have legal capacity. So principal should have legal capacity to form the agency. Okay. Agent does not need contractual capacity means minor can act as agent. So principal should have legal capacity means principal should not be a minor, but an agent can be a minor. Okay. So agent must only have the authority from principal in order to act on their behalf. Should be mentally and physically able to carry out the instruction of the principal. Even if it is a minor, that will be okay. Here consideration is not required. So agency can be gracious. No payment is required to create the agency. Okay. So it do not basically require the contract, no consideration, but there should be consent of the party should be available. Okay. Next is writing requirement. So written agreement will be required only when you are applying this agency to sell the real estate, or your agency's performance required for more than 1 year, then it should be in written form. Otherwise no written form is required. Fiduciary duties of an agent. So if someone is acting as an agent, so what should be the duties of an agent with regard to their principal authority? So as an agent, you have the duty to perform your work with proper due care. You should be loyal to your principal, obedience, accounting, and acting in the principal's best interest. So whatever the actions you are performing, it should be in the best interest of your principal. You should perform your work to reasonable care. You should be accountable to the principal for all money and property you are receiving or paying out. Okay? Any doubt?
No, ma'am.
So here are some of the examples are given of agencies. So express agencies like you are signing a POA. Apparent means principal create an impression that someone is a agent. Minor agent. Next, agent power to contractually bind principal. So when the agent is performing certain action and when they are legally binding the principal. First is actual authority. When the agent have actual authority that the principal has given them. The actual authority is the authority that principal intentionally confers to the agent. So someone has appointed an agent and given them their responsibility to take certain action. This is called the actual authority. It can be explicitly stated or implicitly stated. Means it can be explicitly conveyed to the agent or it may be implied in. Means principal assign a agent a task which cannot be carried out without having certain authority on behalf of the principal. So this is called the actual authority when principal has intentionally confers on agent. So their responsibilities their their authority may be explicitly stated to the agent, or it may be implied, like certain actions which require the agent to have like principal authority on their behalf to perform that action. So for example, a principal tell an agent to purchase raw material. So even if not stated, the agent has implied authority to negotiate prices and delivery term. So if you are hiring someone to purchase something on your behalf, so if you are stating them clearly that you have to negotiate the prices, delivery terms, this is called express authority. But if you have not stated, but still they have the responsibility that they have to, if they have to purchase on your behalf, that means they have to make certain negotiations, certain delivery terms. So it is there implied in authority. Is it clear?
Yes, ma'am.
Yes, ma'am.
Next is okay. Next is apparent authority. Apparent means when principal creates a certain impression that agent has the authority. So even if the agent lack actual authority, the principal may be still bound if the principal word or conduct made a third party reasonably believe that agent is authorized. So for example, have someone you have appointed someone as your agent in the past, but now you terminate that agent, but still your client still have the impression that this agent is your agent, and as a principal you are legally liable for their action. So principal create impression that agent has the authority, like principal must take an action that create the appearance that the agent has authority. Good faith third party reasonably assume that the agent has authority. So if the third party has like belief and perform certain action because they believe that this agent has the authority, then they, in that case, you as a principal you may be liable to the third parties. So for example, you have agent who deals on your behalf in the past, but currently this agent got terminated from by you, but your client still knows that he is your agent and they are not aware about their termination, and they still believe that these they are your agent and they deals with them. So in that case it creates an impression on the third parties that they have authority. Okay. So a company lets an employee sit in negotiation and sign earlier contract. So vendor may reasonably assume that they have authority again. Is it clear about apparent authority?
Ma'am, can you explain again?
Okay, so apparent authority means when your agent do not have actual authority, but due to the impressions of principle, it create an impression that you have the authority to the third parties. Okay, so as I told you that, for example, your employee makes certain contract on your behalf. Okay, so he has made certain contract on your behalf in the past. So if he is currently making certain contract, then the third party will reasonably assume that still they have performed in the past. So that means they also have the authority. Okay, so one more example that you have certain agent in the past who deals on behalf of you to the third parties, to your clients. So if suppose you have terminated that agent now, but since your client do not knows about it and they still believe that he is your agent, and still they are making the deals with them by assuming that they has the authority. So this is called the apparent authority, which is apparent to the third party, which is like appearing, but that is not actually.
Okay, ma'am.
Is it clear now?
Yes, ma'am.
Okay. Rectification means when your agent has done certain action due to which as a principal you are now have to accept that action. Okay, you are now uh, accepting that action, you are deciding to honor that contract. This is called the rectification. So even without actual or apparent authority, principal may choose to accept the agent's unauthorized act. Okay, for example, as I told you, that apparent authority, your agent, even after termination, he is making certain contract with your clients. So as your clients are not aware about this and they have suffered loss because of this apparent authority, but as a principal you are now deciding to accept that contract because of your agent's unauthorized act. So this is called the rectification. So an agent sign a contract without approval. The principal, after reviewing it, accept its benefit. Okay, so agent, suppose your agent has made certain contract without your approval, but as a principal, you are accepting their act. This is called the rectification. Is it clear?
Yes, ma'am.
Okay, so next topic we will discuss tomorrow. So if you have any doubt up to here, you can ask. Any doubt?
No, ma'am.
No, ma'am.
Okay. Okay, then we will discuss the next topic tomorrow. Thank you for
Okay,
joining.
ma'am. Thank you so much.